Good evening and welcome. We're going to bring our webcams on so you can see our lovely faces. Sherry, are you joining us? Oh, look at that bright light. That's how sunny it is here in Brooklyn. Good evening and welcome to the webinar for those who decided to join you. My name is Ella Bates and I'm going to be your chat show host for this evening, introducing the lovely Sherry Corbitt over here. Just a couple of things to talk about before we get started. You'll notice on your screen you have a couple of funky buttons and some features. I want to explain what they are for those who are joining us live this evening. You have a little picture of a hand. It looks a bit like this. If ever we ask a question and we say, raise your hand if this is true for you, you can very simply click on the button. So let's all have a practice of that. If you all click on the hand button so I can see that you're able to use it. Fabulous. We have a couple of hands up. Wonderful. The second feature that we have, and the most important for us, we want to make sure that we have all your questions answered by the lovely Sherry this evening. So at any time you have a question, you can press the little question mark icon there, and you can ask a question. I might not ask it straight away of Sherry, but I'll certainly keep it at the end or bring it up at the relevant section so we can have all your questions answered. If for time purposes we're not able to answer them, of course, we'll be able to contact Sherry separately and we'll have the information there for you. But if you want to note down, her website is mortgagesinDurham.com and you'll be able to contact her direct through there. So I'm going to take myself off webcam now and I'm going to introduce you to the fabulous, the wonderful Sherry Corbitt.
Thanks, Ella. I'm not going to stay on webcam. I just wanted to say hi, and then I'm going to speak and go through the presentation. So I just wanted to say hi. Thank you so much, everybody, for joining us. We're going to cover a lot of topics tonight. It's going to be about 15 or 20 minutes, and then we'll do some Q&A at the end. Okay, so turning off webcam so my nerves don't get the better of me, and I'll talk to you soon. Okay, thank you. So the first thing we're going to talk about is why you would use a mortgage agent like myself versus a bank. There's two main reasons, and one of the very first questions I always get from people is, what do I charge for my services? Let me assure you that for 95% of my transactions, there is no fee for my services. And if there was going to be a fee, it would be disclosed up front, and it usually has to do with a credit challenged file or maybe a property that has unique circumstances. So for majority of the clients that I work with, there's no fee for my services. I work the same as an insurance broker where I can bring multiple lenders to the table for you to look at their products, and then the lender pays me depending on which product we decide to go with. So that's one big thing that you need to know. As far as why you would work with a mortgage agent, there's two relevant reasons. The first one is that I have multiple lenders that I deal with. So, for example, if you walked into TD to talk to somebody at the branch level, you're only going to be offered a TD product, and I'm going to be able to offer you TD and Scotia and a multitude of other lenders. And then we're going to be able to discuss which type of products interest you the most. So perhaps making sure that your mortgage is portable, which means that you can transfer it from, say you buy a home in the Durham region and you know that you're going to be maybe moving to Niagara Falls in the next couple of years, we want to make sure that your mortgage can be picked up and moved over there. Or perhaps you're expecting an inheritance or a raise, or you have some bonus income coming in and you want to make sure that putting that towards your mortgage and getting the principal down is a high priority. We're going to make sure you have good prepayment privileges. Another reason that people like working with a mortgage agent versus the bank is simply the rates that we can bring to the table. This just makes common business sense. If you walk into TD, I'm going to pick on TD a lot tonight, but if you walk into TD with your $200,000 mortgage, there's a good chance that because I fund $10 million with the TD every calendar year, I'm going to be able to get you a better rate, a more exclusive rate. The more that we do with the particular banks, the better rates that we can pass on to our clients. So that's two reasons right there. I have noticed that about half of you have already started working with a mortgage professional, whether it be the bank or the mortgage agent, and that's good to start the process. For those who haven't started working with somebody, feel free, my information's also there. I can answer more questions, or you can always Google to get some information about who you may want to work with. Okay, so now we're going to get into the three most important elements to purchasing a home and how the lenders view you and whether they're going to give you an approval. The first one we're going to talk about is down payment. So traditionally for a first-time buyer, you may have the ability to purchase with as little as 5% down. There is a product called Flex Down, which allows you to, if you don't have the 5%, borrow it from a line of credit. This isn't for everybody, and you have to have a really strong credit score to be able to apply for this. So if you don't have your down payment yet, but you want to learn about the flex down, not all lenders offer it. We'll talk separately about that. Let's work on a traditional mortgage, which is what I traditionally see, which is the 5% down. If you're buying and you have less than 20% down, you're also an insured mortgage. This means that you have to have CMHC or Genworth or Canada Guarantee a premium rolled into your mortgage. It's not a fee you have to pay, it's rolled into your mortgage. So don't worry about that. The thing to remember about down payment is, from a lender's point of view, it's all about show me the money. You have to put on your lender's hat and think from their point of view. They have a responsibility to prove that the down payment's not coming from a fraudulent source. So if you have $20,000 in rolled quarters under your bed, that's not going to do us any good. We're going to need to get that into a bank account to show that it's yours and give 90 days history on that bank account. So the sooner that we can get your down payment into a bank account and start building history, the better for us. Traditional ways that people have down payment is either in their savings account, maybe a tax-free savings account, maybe an RSP, or perhaps a gift. If it's a gift, it will be from a family member, and they'll have to sign a letter from the lender saying that the money that they're giving you has no obligation to be repaid. So let's do a quick poll and just see who, if you could raise your hand, who has their down payment ready as of today or very close to being ready. Take a minute to see.
So we had a few people instantly press on the raise your hand there, who are obviously very, very excited they already have the down payment. We're looking, currently, there's around about 40% of you right now that have your down payment. Awesome.
Okay, oh great. That's really good news. And for those of you who don't have your down payment ready, there's definitely time to save. I want to take a moment to talk about RSPs and how that works. So as a first-time buyer, you have a unique opportunity to tap into the Home Buyers Program. The Home Buyer Program allows you to withdraw up to $25,000 from your RSPs. The reason you would perhaps consider doing this is, if you have your money right now, let's assume you have $20,000 saved, and it's just sitting in a savings account. If you were to put that into an RSP, you're going to get a bigger tax refund on your next calendar year. And that money you're going to get back on your taxes can either go to boost your boost your down payment, or you can use it towards paying off something, or maybe buying new furniture, whatever you want. It's your money. It's practically free money because it's a tax shelter. You get about $250 back for every $1,000. So that $20,000 I just mentioned, you're going to get about a $5,000 boost to your tax refund next year. A couple things you need to know about the RSPs, though, is that one, you need to repay it within 15 years. So it's not, you do need to repay back into your RSPs. The second thing is that you need 90 days history on the RSP. So right now, if your money is sitting in a savings account, not really earning anything or doing anything for you, but waiting for the down payment, you may want to consider putting it into an RSP if you're not going to be buying in the next 90 to 120 days, to allow that tax refund to help you. That's just something to consider. After this event, I have a YouTube video I'm going to send you. It'll be in the email, and it'll have a link. It'll be about a 2-minute video, so you can really see the details on that. Okay, so we've already talked about the RSPs. Now, if you're looking for a gift, you'll have to have your family members sign a gift letter. So I just want to reiterate that. The next important element for the approval is your credit. Good or bad, or love or hate it, it is how the banks judge you and how they're going to look at your credit worthiness. So it is important to have at least 2 forms of credit, whether it be a credit card and a car loan, or a student loan, or a line of credit. Maintaining 2 forms of credit, even if you keep the balances low, is important. I have lots of tips and tricks on how to improve your credit score, so if you feel that that might be something that you need to take advantage of, contact me after this and I'll make sure I send you the proper information on how to improve your credit score quite quickly. But I'm not going to go into that too much right now. I have had people come to me in the past And I'll be honest with you, they've come to me in the past, they've thought they've done everything right, and they have no consumer debt, and they've closed their credit cards. Well, having no credit is actually harder to get approved for than having bad credit, because with bad credit, we can usually explain what happened, or we can take the time to fix and get your credit score up. But if you come and you have nothing and no history, it's going to be a lot harder. So keep that in mind. Maintain 2 forms of credit, and we'll go from there. If you do require, if your credit's a little weak and you do require a co-signer, that may be the option for you. So let's take a moment to consider if you need a co-signer. So give this some thought as to who might be able to co-sign for you. Are you aware of any your family's ability to help you? If having a co-signer is an option, I can help explain to them their obligations and risk. I have a YouTube video, again, I have another one, that discuss directly to the co-signer their obligations and things that they need to be aware of. I recommend that they get their own legal counsel so they understand what's going on. As far as a good family member that would be good, it'd be somebody who has decent credit and whose current liabilities, which would be their mortgage and their debts, are not a hindrance to the deal, that their income actually outweighs the liabilities that they have. But we have to keep in mind this is very important for co-signers. The new mortgage that they're signing on your behalf is a liability that they need to then carry. So if their own mortgage is due in the next coming years, we're going to have to look at both pictures and make sure that they're still going to be able to maintain their own mortgage, and we're not going to cause them any problems. This is stuff that I sit down with both the co-signer and yourself and discuss, and together we make a choice about whether they're a good co-signer for you. So we can discuss that in future. The third element, and probably arguably the most important one, because with down payment you can save or be gifted it. With credit scores we can build it and get it stronger. But there's not a lot we can necessarily do about income versus debt. So this is the numbers, it's a ratio number that we look at to make sure that you can afford the home that you're in. There's 2 very important numbers that we're going to look at. The first one's called your GDS. It's your gross debt services. It's your mortgage payment per month, $150 heating bill, and the property tax payment per month. Those 3 numbers cannot exceed 39% of the income coming into the home. That number is going to tell us how much you can afford of this property, this mortgage. That's going to set your mortgage amount. Now the TDS cannot exceed 44%. That's your total debt services. It's the 3 housing debts I mentioned that form the GDS, plus any consumer debts such as credit cards, lines of credit, car payments, and so forth. If we need to lower your TDS, we can do so by paying off some debt. I want to just take a moment, we've covered those 3 things, to let you know that if you're weak in one of these elements, it doesn't mean you can't get a mortgage. It just means that we have to consider which lender fits your needs, and I can use my expertise to help you figure out how to get into that home ownership. The goal is to get you into a home, and we can definitely do this.
Sherry, I'm just going to interrupt you for a second. There's been a question regarding the GDS and TDS. As someone here said, they're very excited that you have a YouTube video. Where can they find the links for it? So I just want to mention, for those listening on the recording, you are in fact going to find it alongside the recording, whether it be on a website or YouTube. And then you're going to email them, aren't you, after the live version here, Sherry?
Absolutely. So right after the live version, you're going to receive a couple links to my YouTube. I believe if you're super eager, you can go onto YouTube and Google Sherry Corbitt, and it'll be on there. I have about 18 videos, but I am going to link you, send you by email the ones that I think are very relevant to a first-time buyer.
Awesome. Thank you, Sherry.
Okay, perfect. Next, we're going to talk, so we've talked about the 3 elements and how lenders look at those things to get you into a mortgage. Now I'm going to take some time to talk about buyer beware. This is stuff that you need to know so you're more educated in the decision process of which mortgage you're going to choose. You're going to be offered a few different types of mortgages, so we're going to have to pick the one that tailors to your needs. First thing we're going to talk about is penalty. Okay, back to the videos. There's a great video that I did on the penalty. It's probably my most liked penalty. You will get that, and it's going to describe what I'm about to explain. So on the screen you'll see a sample of a mortgage. If you had a mortgage of 2.44, that's your interest rate, which we also call your contract rate. So you have a contracted rate of 244. That's what your payment's based on. If you were to log into, okay, let's pick on TD again. If you were to log into TD today, you may see a posted rate listed on their website of 464. I have so many people ask me, why is there a posted rate? I'm not going to go to the bank and pay 464. They're crazy if they think I'm going to pay it. Well, the truth is, you know you're not going to pay it. I know you're not going to pay it. That's not the interest rate they're offered. The reason it is there is so if you have to break your mortgage, because things happen in the course of a 5-year fixed mortgage, so if you had to break your mortgage, they will base your penalty on the posted rate the day you took that mortgage. So the posted rate of 464 is a difference of 2.2% from what you're actually paying. How they calculate your penalty is the difference of 2.2% times the balance of the mortgage times the months left, and that's going to equal a really large penalty. There are lenders out there that calculate their penalty differently, and that's going to be on the next screen. We're going to get there to show you. So I'm going to probably suggest a lender who calculates their penalty not off the posted rate. That means, for example, you're 2 years into your mortgage and something happens, you need to break your mortgage. Your current interest rate is 244, and the lender's current offered rate, so not the posted rate, but their offered rate is how they calculate their penalty. If their current offered rate is 234, that's only a difference of 0.10%. So now your penalty is 0.10 times the balance times the months. You can see that that is going to make the difference of a $10,000 penalty versus a $1,000 penalty. In the video I show you, it's going to show the exact same thing we just discussed, but that's a very, very important feature of maybe why you pick one lender over another. Again, I'm going to help you guide through that. Okay, next we're going to go on to collateral mortgages. So collateral mortgages is something you need to know about. A collateral mortgage is when the full price and value of the home is registered as the debt on title. Let me explain what that means. So you buy a home for $400,000 and you need a mortgage of $300,000, but the bank registers the collateral charge for $400,000. Why they've done that is, should in the future you want to put a line of credit behind your first place mortgage, the $300,000 mortgage, you want to put a line of credit behind it with the same lender, they've already locked in the equity behind them. They can do that for you. So that is a bonus for that. But try to think of the bigger picture. Think of scenarios that you can't really consider right now. Something happens, maybe there's a job loss, an illness, or maybe something good like maternity leave coming, and you need to tap into that equity behind your first place mortgage, and the current lender says, you know what, you don't fit in our boxes anymore. You don't have the greatest credit score, or your income's not where it needs to be. We don't want to work with you. If you'd come to me and it wasn't a collateral mortgage, I can still put a second place mortgage behind that first place and help you out. I can help you get to where you need to go. We can put a small second or perhaps a line of credit behind your first place. I can't do that though if the bank has locked in that equity. So basically a collateral mortgage, in my opinion, is a pair of handcuffs on your future. You don't know what's going to happen, so you need to make sure that that equity has not already been locked down in a future scenario, because we want to be able to access it if we have to. I hope that all makes sense for everybody. I'm not trying to scare you. I'm just trying to let you be educated, so when it's time to get your mortgage, you pick the right mortgage for your needs. All right, so we're going to talk about Meet Your Team. And there's 3 elements to meeting your team. There's probably going to be your mortgage agent, which I'm going to put my smiling face on there. And you're also going to have your dedicated realtor and then a real estate lawyer. You want to make sure you have a real estate lawyer, not a criminal lawyer or a lawyer who dabbles into too many elements. You want somebody who specializes in property. You may also have a home inspector, but I'll let your realtor go over that with you. I think we're going to take a second, and Ella's going to see about launching a poll. So just hang tight, and she's going to ask a poll. Oh, look, there it is.
So let's ask you, who are you already working with? Are you already working with a realtor, a lawyer, or even a home inspector? So make your selections right now. We have 33% of you voted 67%. Those who haven't made their selections make them now. Let me see. Wow, this is super interesting. I think you're going to find this interesting here. Okay, final seconds. 5, 4, 3, 2, 1. And let's have a look at the results. Hey, guys. As you can see, 100% of you have a realtor. Wow. Nobody has a lawyer or a home inspector, Sherry.
Okay, well that actually falls with what I usually see. Sometimes people come to me prior to working with a realtor. However, a lot of times they're already working with a realtor, and the realtors know that you need to have that mortgage approval in place, so they send you to me to deal with. So that actually kind of jives with what I'm thinking. Your lawyer is probably the last piece of the equation, because you don't need a lawyer until you've bought a home. And between your realtor and myself, we'll tell you who works very well with us, because we are your team. The more that we can connect behind the scenes, the less stressful this purchase will be for you, and the more smooth it will be if we can talk together. So having said that, if you don't already have a realtor or a lawyer, I'd be happy to help match you up with the ones in the Durham region that I feel would be great fits for you. Okay, next we're going to talk about, we're almost done actually.
But before we do, can you tell us a bit about your history? Because you used to be a realtor, didn't you, Sherry?
Oh, that's right. We did talk about this. So as I did used to be a realtor, and I have a piece of advice that I want to share with you from my unique perspective of having been a realtor and now be a mortgage agent in the industry, which is I highly recommend that you have your own realtor, that you never, never, never call the realtor who has the property listed that you want to work with and ask them to put the offer in for you. You have to think about it as this way. That realtor is already contracted and working for the seller. And if you're not already aware of this, as a buyer, you don't traditionally pay for the realtor services, because whoever's selling the property, it's built into the selling commission. So not only are you not going to have a fee for working with that realtor, you're going to have your own realtor at the table negotiating for you. Because if you called the realtor who's working with the seller and you ask them to negotiate for you, well, then you don't have anybody at the table working on your behalf. I highly recommend, given my experience, that you work with your own dedicated realtor. I've already mentioned that I'm going to be sending you some information so far, and I'm going to send that to you post this by email. If you're watching this as a recorded version, feel free to email me at sherry.corbitt@migroup.ca. That's sherry.corbitt@migroup.ca, and I'd be happy to send you along the videos and worksheets I think suit first-time purchasers. Now let's see, we're getting into the Q&A section. Is there any questions, Ella?
There is actually. Lisa asked a little earlier on. Let's bring our webcams up here so we can have a little chat to our people. Dun, dun, dun.
Back to the webcam.
Right, and I can see us. Oh, that bright light. Where's that coming from? There's a shining star here sat next to me. That's what that is. So Lisa asked, she said, my down payment isn't in an RSP yet. Is there anything I should know on getting it into one?
That is a fantastic question. Thank you, Lisa. So if you're not currently in RSP, but I've piqued your interest about learning about the home buyer's plan, I do have a couple things to remind you. First of all, the RSP needs to be in for 90 days. So you have to make sure you have at least that amount of time to get it into the RSP before your purchase date. So if you haven't purchased yet, there's probably still time. However, keep in mind that if you were to walk into the bank right now and ask for an RSP, and you're upfront with them and tell them that you're going to be withdrawing this only in a couple more months, they're not going to have the time to earn their commission off that RSP, so to speak. So there's going to be fees and services attached to that. If you're at that situation where you have money and you want to put in an RSP, call me and I'll connect you with some financial planners who, when we tell them up front that this is happening, will be able to minimize the amount of fees that are on the end, if any, so that when you do withdraw it within 90 days, 120, or 5 months, whatever the mark might be, your fees are going to be very low.
Awesome. I hope that answers your question, Lisa. If not, please put in the chat box. Brandon said he has a very nice friend who can gift him the down payment. So where does he go from here?
Well, that's a really nice friend, first of all. With down payment from friends, unfortunately, that's not allowed. You have to, again, always put our lender's hat on. And the lender's going to say, why is somebody giving you money that has for no strings attached? How good of friends are you? So they want to see a gift come from family members. If your friend absolutely has the money and wants to give it to you, we can look at perhaps making him a co-signer, which means he can put money into the property. That's fine. But traditionally, a gift needs to come from a family member, because there's a logical reason why mom or dad would give you some money to help you get into your first home.
That makes sense. But there's a way around that, and you can speak to Sherry about that. Awesome. So great one. That's great, Brandon. Congratulations on having a really rich friend.
Yes.
Amy said she's on contract at work. Is she able to get a mortgage?
Oh, yeah. Okay, so contract work is definitely something that people feel is always going to be a hindrance to them. But to be truthful, majority of the times it's not. There is some lenders who shy away from contract employees, but there's a lot that deal with them, and they understand that that is the nature of our employment world out there these days. What we're going to be looking for, though, is how long have you been on that contract, and is there an end date to the contract? Is the contract open for renewal? Not contract work, but a scenario that I've been dealing with just recently is a gentleman who digs pools. So he works from May till about November. Well, with this weather, he might be working a little later, but May to November, and then he goes on EI from November to April. This is a cycle that he's done for more than 2 years, so we can prove that by looking at his notice of assessments. Your notice of assessment is the tax document you get back from the CRA after you file your taxes. So as long as we can show that the contract work is steady, something you've done in the past, and have an opportunity to continue to do, we can absolutely work with that. I actually will take a moment to quickly just mention that union workers who work multiple jobs, so you might be on 30 or 40 or 50 different employers throughout the year because you're piecing it together, we can definitely work with that by using a union letter. Just wanted to insert that there.
That's good to know. Thank you, Sherry. We have one last question. If you have any other questions, please send them to us now. One last question. Darren says, is it better to pay down a debt rather than to have a bigger down payment? What's the best option there?
The best option is talk to me before you do either. No, honestly, it comes down to that GDS and TDS. So the GDS may fall in line and say, hey, you can afford this home. We believe you can make the mortgage payment, the property tax, the heating cost, but your TDS is completely out of whack. You have too much consumer debt. In that case, we're going to focus on paying down the debt. If that's not the case and both ratios are completely in line, then we can just look at whether you would like to have a lower monthly mortgage payment or also lower the CMHC insurance premium by putting a bigger down payment. Or is it better to have some consumer debt done so that this might be the only opportunity you have to pay off that, to get ahead of that large line of credit or that large credit card. Either way, having money and not knowing which way to put it down, I'm going to help you figure that out by looking at those ratios. It all comes down to that balancing act with the GDS and the TDS, and I can help you figure that out.
Awesome. Well, just to double check, I'm going to have one last check here. If there's any other questions coming through? No, not at all. So I'm going to shut down my webcam. You don't see my face anymore. Last words here from you, Sherry.
Okay, well, thank you for staying with me throughout the webinar. I hope you found some information that is very useful to you. Just to remember that I will be sending you emails, because I have your email addresses, with those tools and video links that we discussed. And also, post-webinar, there's a 1-minute survey. This is my first webinar, so I would love if you could take the opportunity to give me some feedback, because I do plan to have more in the future, and I'd like to know what works and perhaps even what doesn't, so that we can move forward. So thank you again for joining us. I'm very excited to be with you on this home buying experience and get you into that home ownership that you want to do. Thanks.